Hey guys, welcome to this video. I just thought at the end of the week, I haven't done an oil post for a while, so I'm going to do one now. Thanks if you came to my stream this morning. I'm sure you learned tons, quite a long one. If you want to grab my free training, of course, it's underneath. So let's crack on with it. As you've seen in the news lately, there's oil cut reports. Okay, so cutting output, of course, means there's less of it. Okay, it lowers the supply, the price starts to rise. So number one, the reason why you've had that raise in price as of late is because of that market sentiment, and it's so important to be reading that market sentiment at all times, because that's going to tell you exactly where markets are likely to go. Of course, when they start to rally and rally and rally, your goal really, in my opinion at least, is to exit those longs you had and look to where you'd like to short, because we all know that market sentiment is not going to last forever. The market is not going to keep going up and up and up and up endlessly. It just doesn't work like that. It runs out of steam eventually. That's what forms the long-term market. That is why you see these oscillations occur. Okay, that's what forms it. Mixed sentiment. Sentiment is bad, sentiment's good. Sentiment's good, sentiment's bad. Okay, buying and selling, output and supply. Okay, it's demand and supply essentially. So we know that the market sentiment is pulling the market up. I had one of my academy members ask me about this. He said, I've shorted already. It's starting to push a bit. So I said, look, I would probably space your short out and give the market some time to move. When the sentiment gets strong, in other words, it's likely the market will keep rallying. I spread my shorts out. Now, I really like all of this as an area of price rejection to get short at, i.e. Price action rules, more or less. Okay, anything in here I should think is going to be an ideal goal up to $93 to get short. I think at that point your sentiment may start to fizzle. Like I said, it's not going to go on forever. You're not going to have the market rallying and rallying and rallying endlessly. It just doesn't work like that. And that's why you saw this enormous fall here, because suddenly people don't want oil, all right? And that supply goes up, the demand goes down. But of course, you've got the flip side now. The retracement you're getting currently, if you check your fib, it would be just above the 38.2 going on to the 50 fib. Okay, so remember, we're not looking to hit the lines on the fib levels and bounce away like magic, as if by magic. It doesn't always work like that. We're looking to just scale in at an appropriate price short. Okay, so that's why I'm looking to short up here, because it comes off the back of significant up moves. Okay, you've had now since the end of June all the way up practically with just two red candles. Okay, that's very vicious and it's an awful long push. Okay, so my bias is changing short, but I'm letting the market run slightly, because just as that market sentiment, if you look just here, you can see how strong the sentiment is, because you've only had one red candle and it really didn't do a lot. You had instant rejection and you're attacking that previous high that you just saw. Okay, the market is rallying straight into it. So I do like to mix in strong fundamentals with my trading plan, but if I'm going to take an entry, if I'm looking for a price to enter at, I want to make sure it's a good one. I want to make sure it consists of market rejection. So it's likely that when I do get in, the market is going to turn. That level for me is nearer to $93. I'll probably start to lightly scale in nearer 90. So you could have a front runner, you could start to approach the market, and then more valid zones would exist higher up. Thanks for watching, guys. Hope that helps. Remember, grab my free training underneath. And as always, I'll see you in the next trading week. See you there.